Earlier this morning, I made a video for you all telling you that what happened today and what we were seeing on a very specific chart was going to be extremely important. I said, if one thing happens, the market's looking good. If it doesn't happen, the market's going to be looking bad. And since that video, that thing did not happen, leading the market down, seeing many altcoins down anywhere from 10 to 20%, altcoins getting absolutely nuked, and investors wondering what happens next. And so what I wanted to do before I do go catch this flight, I wanted to give you a quick update letting you know, look, this is where we are, this is what I think is happening, and this is what I'm doing as a result of it. And so with that said, let's not waste any more time at all, and let's get straight into it. Now, looking at the altcoin market, okay, what we can see is that in the last couple hours, everything just went red. Everything that was green this morning in our morning video, absolutely red right now, getting wrecked. SPX, Beam, Doge, STRK, SHIB, FET, Sangala, all of them are red. Now, this is a result of what we saw this morning failing. In this morning's video, I told you all, hey, pay attention to what is happening right now. What we saw was that total 2, which is simply just the total market cap of all altcoins, was coming back down and retesting this previous point of resistance. We had broken out of this descending channel that we were in right here. We've broken out of it and we were coming back down to it. I told you, hey, if we hold support here, that's actually a very good sign. It's a good sign that we'll get some sort of RS flip. We'll use that flip to build a foundation, use this foundation to try to continue higher. I told you, though, if it fails, though, that's not a good sign. That's not something you want to see. That means that even though the price still very well may go towards the upside eventually, it's likely going to delay it by, if not days, but possibly even up to weeks. And we didn't want to see that happen. And although we haven't gotten the daily close yet, so there technically could still be the ability for the daily candle to work itself back up and close back above this line. At this given point, we are seeing this thing turning into a bit of a red fest, leading many altcoins down the rabbit hole of doom, kicking granny down the stairs, I like to say. And so with that in mind, what I want to do is kind of, now that we have seen the support level fail, now that we have seen this back test fail, I want to tell you exactly what this means. Is it a bad thing? Is it a good thing? And more. So what we're going to do is we're going to start over on my Twitter first and foremost. It's at Tyler Hill Crypto Talk, or just at Tyler Crypto Talk. Feel free to go follow it if you'd like. I said we have now seen total 2 fail the back test of the descending channel after being rejected off of the golden Fibonacci zone. The golden Fibonacci zone being this box right here. Now, I said if the daily candle closes back within this descending structure, we will have confirmed that yesterday's breakout was indeed a fake out. So instead of this being a real breakout to the upside, this is now a fake out. Again, very, very not good. We don't like to see it. But again, that is a very bearish move in crypto. I said, with this in mind, though, we are getting many indicators flashing buy signals right now, such as the 1 hour and 4 hour RSI and Bollinger Bands. So what you can see here, if we turn on, say, our Bollinger Bands on the 1 hour, we're extremely overextended into the bottom side. The 4 hour, extremely overextended into the bottom side. The 4 hour RSI is back at the 37 level, which is weak territory, almost an oversold territory. And the 1 hour RSI is an oversold territory at the 22 level, which is the lowest level that it's been in ever since we put in that bottom back here before this pump actually started. And so with that in mind, also, we have a lot of room to fall before invalidating the current Elliott's wave setup, which shows that we are in wave 5 and could still push up another 20 to 30% from here. What I meant by that was if you actually go out, let's go to the 4 hours, let's turn on our Elliott's waves. What you can see here is we are still in a situation in which we've put in, of course, wave 1, wave 2, wave 3, wave 4, and we are still in a validated structure on Elliott's wave theory to be able to continue upwards and put in this 5th wave towards the top side, which could still mean the altcoin market could push another, 20 to 30 to 40% towards the upside. This has not been invalidated yet. Even if we do pull all the way back down to 1.32 trillion to these previous support zones, we still would be in this 5th wave. It would take a lot for us to invalidate it, meaning that the macro structure has not been destroyed yet. And so knowing these things, although this is definitely a bearish move from the altcoin market, it's not the end of the world. It's just a setback in the upward move that will likely delay any sort of bullish momentum. For now, I'm buying crypto today. All of my purchases are available over in our crypto school. And so that's my general thought process with this, is that, listen, yes, no, this is not good. And you don't want to see this happen, but it's not the end of the world. It doesn't mean that we have to go all the way back down. It doesn't mean that we have to see the crypto market crash. It doesn't mean that we're going to see everything drop 40 to 50%. It just means that what we were seeing in terms of the bullish momentum that we've been trying to build over the last few weeks was just denied. It got rejected. The bulls lost this fight. We got rejected off the golden Fibonacci zone. We lost major support here. We headed back down towards these levels. Now, mind you, we might see this market just recover immediately, right? And go right back out here and then start trying to make that move upwards. That's still a card that's on the table because it wouldn't shock me We are in whale games. We are in the lizard people games. And these are the types of moments you have to be prepared for. From a technical perspective, we knew this was a possibility. Matter of fact, if I actually do go out to the school, I can tell you what I said here yesterday. Yesterday at 1:35 p.m., I told everybody, look, now that we've gotten the breakout of the descending channel, as you can see right here, I told people what we still need to see is it break the golden Fibonacci zone. The reason that this is so important is that this is the most likely level to turn this breakout into a fake out, forcing the market downwards. I told you all this, that this was a possibility as a result of the golden Fibonacci zone, as a result of this golden box. It happens all the time. But in addition to the technical things that are happening here, we're also dealing with the lizard people. We're also dealing with them trying to force these liquidations, forcing these fake outs and false breakouts and micro pumps and all these things because they're trying to get as many liquidations as they can, and it's working. If we actually go out to the 1 day, do you remember how just this morning there were hundreds of millions of dollars of liquidations that would happen if the market fell to $97,000, $98,000? Well, it's happened. They won. They let this market break out towards the upside. They let it gain some momentum. They let people start building up huge long leverage trades on 100x and 50x and all these stupid trades that they could possibly open. And in the moment that they were happy with it, this market took a dump. If you don't think that there's some sort of manipulation going on, you're just being naive at this point. And so what you can see is that from a technical and a manipulative perspective, we've seen the market pull back as a result of all of these things. And that's why I tell people all the time. I think I even said it here I think I said it some here. Yeah, no, that was actually in the same post. Now that I think about it, I said, look, so in order to avoid this, so I said, obviously the fake out, forcing market downward, et cetera. In order to avoid this, we need to clear this zone sustainably. If we do this, I'll likely do another DCA as well and start as well as start my leverage trading again. And I told you all in yesterday's video, I'm still not leverage trading. Just because we got this breakout does not mean that everybody can start betting all of their bags that we're going to go up. You can't make that bet. You have to still understand that there are things that need to happen in order for us to confirm breakouts of this nature. And you have to be aware that fake outs like this are going to happen. Liquidation events like this are going to happen. The whales are going to try to get you at every turn that they possibly can so you can't fall for it. And so with that in mind, the whole point of today's video is to tell you, look, yes, what we just saw was very bearish and it's not a good thing. I don't like what we just saw, to be honest. This breakout is now a fake out unless the daily candle somehow works itself all the way back up here and closes up here, which would actually be a good thing. And so knowing that this breakout as of now is now a fake out, you have to understand that we're very likely going to delay any bullish momentum that we had. If we were going to make a move towards 1.5, 1.6 trillion over the next week, that's not going to happen for at least a couple more weeks. There is a decent sized chance that we do see this market start kind of trending somewhat sideways, start trying to build up some support and make another run to the upside. So there is still some possible room. Many of our indicators are oversold, so I don't think this is going all the way back down, meaning this isn't the end of the world, but this definitely is a big speed bump in the grand scheme of things. You just need to be okay with it. It's just what happens. This is, again, why we weren't heavy leverage trading right here, why we did tiny dollar cost averages right here, and we're not over leveraging at this point because it's just too risky. And so with that in mind, I hope some of you can start to understand what I tell you when I say this is a high manipulation zone. Things like this are going to happen. You're going to lose for absolutely no reason, out of nowhere, and it's best to just avoid it. It's simply just the best thing to do. And so with that in mind, of course, that's where we are. As we do get a little bit more clarity, whether or not we, maybe start trying to break back to the upside, maybe we get one more little C wave towards the downside, maybe we start building up some support. As we do start to see this playing out, I will update you and kind of let you know what's going on. But for now, the best thing to do, in my opinion, is to either do nothing or start dollar cost averaging very slow, tiny amounts. I did some small purchases in here. And the lower that we go, the more I'll start doing. The ones I did them on today were the ones that, of course, did start seeing their prices reach major support levels. And, of course, if you do want to see the things that I did buy, again, you can feel free to go check out the crypto school, which is linked down below. You can join for $5 or $17 a month, okay? And so with that in mind, again, as this all does play out, I'll continue to keep you updated. But for now, just play it safe, lay low, be careful. If you're going to buy in small amounts and just relax until this market cools down. And so with that said, of course, I hope this video was helpful. I hope it kind of calmed your nerves a little bit. It's not the end of the world, but things may get a little ugly from here. So you just got to be okay with it. Okay. So again, I'll be here for you as all this does play out. Go follow me on Twitter, go join the school, and I'll see you all soon. Peace out, everybody.